Welcome to this strategic intelligence brief on ARM Holdings for the year 2026. Today, we examine a historic transformation, ARM's evolution from a traditional provider of chip blueprints into a formidable silicon powerhouse. By 2026, ARM has repositioned itself as a central pillar of global AI infrastructure, shifting from a business model measured in cents per chip royalties to a vertically integrated platform capturing billions in margin. This presentation will detail how this shift is fundamentally reshaping the economics of the modern data center. ARM's 2026 market strategy is defined by a three-pillar evolution designed to move the company away from smartphone dependence toward high-margin growth in AI infrastructure. First, we have Compute Subsystems, or CSS, which provides integrated, ready-to-tape-out designs. Second is our direct silicon pivot, highlighted by the AGI CPU developed in collaboration with Meta Platforms. Finally, the sovereign AI play addresses the global demand for localized, secure AI infrastructure, allowing nations to bypass the so-called NVIDIA tax while maintaining data privacy. Taking a closer look at the licensing revolution, the Compute Subsystems model marks a pivotal departure from traditional IP licensing. Instead of customers licensing individual CPU cores and managing the integration themselves, ARM now provides pre-verified bundles that include memory controllers and security layers. This has resulted in a 50% reduction in design cycles for our partners. With 21 licenses secured by major customers like AWS, Google, and Microsoft, CSS not only doubles our royalty rates, but also creates a deep strategic moat through high switching costs. In 2026, ARM's competitive advantage is built on three unique selling points: agentic performance, compute density, and a dual revenue moat. Our AGI CPU utilizes single-threaded Neoverse V3 cores to ensure deterministic performance, which is critical for complex AI workflows. Furthermore, we are achieving leadership in compute density, supporting over 45,000 cores per liquid-cooled rack, nearly double that of traditional x86 deployments. Crucially, our financial structure now benefits from both traditional royalties and direct chip sales, a combination that competitors find difficult to replicate. Let us dive deeper into the architecture of the AGI CPU. Engineered specifically for next-generation AI, it features 136 single-threaded Neoverse V3 cores designed to eliminate latency spikes. The system supports a massive 6 TB DDR5 memory capacity, enabling full in-memory inference for frontier models. Manufactured on TSMC's advanced 3-nanometer process, the chip maintains a 300-watt TDP, offering best-in-class performance per watt. This efficiency and optimization for Llama-based agents are precisely why Meta chose ARM to power its AI infrastructure. A comparative analysis with NVIDIA's Grace CPU reveals a fundamental difference in philosophy. While NVIDIA Grace is primarily a helper chip designed for spatial threading to feed data into GPUs, the ARM AGI CPU is a leader chip optimized for reasoning and coordination. With nearly double the core count and significantly higher memory capacity at 6 TB, the ARM AGI CPU is built to handle the orchestration of complex AI agents within strict data center power caps, offering a more efficient and scalable solution for 2026 and beyond. The sovereign AI market represents a $500 billion opportunity. From the Middle East to Europe and Southeast Asia, nations are prioritizing independent AI infrastructure to ensure economic self-reliance. ARM is uniquely positioned to win this segment because our open ecosystem and customizable architecture are not subject to the same export controls or proprietary lock-ins as specialized GPU stacks. By providing a foundation for green, localized grid infrastructure, ARM enables nations to build their own national LLMs without being beholden to a single proprietary vendor. Turning to our market performance, the 2026 outlook is exceptionally strong. We expect to reach $4.01 billion in revenue, representing a 24% year-over-year growth. Most notably, ARM is projected to secure a 50% share among top hyperscalers by the end of this year. While we continue to monitor risk V in the low-power IoT segments, the narrative for ARM has successfully shifted from a mere royalty collector to a high-value silicon producer, driven by hyperscaler adoption and our strategic positioning in sovereign AI. As we project our financials out toward 2031, we see a trajectory of robust growth. The strategic shifts we have implemented today, specifically the transition into AI infrastructure and the diversification of our revenue streams, are expected to drive significant expansion. Our focus remains on scaling these high-margin initiatives to ensure that ARM remains at the forefront of the semiconductor industry for the next decade. It is important to acknowledge the risks that could impact this thesis. The commoditization of the volume tier by risk V and execution risks regarding our $15 billion AGI CPU target are high priorities for management. Additionally, geopolitical tensions and competitive responses from Intel, AMD, and NVIDIA require constant vigilance. However, our diversified revenue streams and the strong momentum of our ecosystem provide significant mitigating factors. We believe our structural position remains strong, and these risks are manageable given our deep integration with global hyperscalers. In conclusion, the strategic verdict for ARM in 2026 is one of transformation and dominance. We have moved from the licensing-focused SoftBank era into a new phase as a silicon and AI infrastructure leader. ARM is no longer just a licenser. We are a silicon company with a dual revenue model that provides structural defensibility and long-term conviction. Driven by our AGI CPU and the expansion of sovereign AI, ARM is the backbone of the next generation of global compute infrastructure.